Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, August 13th, 2010. Friday the 13th. I could tell you my own interesting Friday the 13th story from this morning, but I'll spare you the details. Needless to say, it started with a snafu, and hence I'm getting a little bit later of a start this morning. But today we're going to talk about down but not out, and we just got some recent data reports out of both the Eurozone and the U.S., which are slightly encouraging considering what we've been seeing out of the markets as of late. Now, GDP came out of the Eurozone led by Germany's increase of 4.1%. Now, the expectation was for an increase of 2.4%, so that handily beat. Okay, this helped push Eurozone CPI figures overall to 1.7% versus an expectation of 1.4%. Okay, but as you can see here on the chart, we've got some Eurozone selling, and you may be saying, well, these numbers are pretty good. What's going on? Well, there's increased talk now going back to the old European debt crisis. Rumblings out of Greece and Spain have got investors concerned that perhaps there's going to be more problems going forward. Now, we know about the problems that they've had over there. Now I guess Greece is reporting much higher than expected unemployment, and people are starting to think that this could really drag on their ability to meet their debt service. So it looks like there's a bout of risk aversion in the market today, which people don't want to go into the weekend long the euro in the event that something should happen here. So as you can see on the chart here, just looking on the 5-minute, things were looking okay. We also had U.S. CPI data and retail sales figures came in largely in line. And you can see right here at 8:30, this was that little move here. But we're in a little bit of a tight range. I think the markets are a little bit tired. We've been seeing a lot of selling as of late, a lot of risk aversion. But right here, going into the close of the euro session, which is about an hour away, you see some selling here. And that could be just people looking to ditch the euro for the weekend. Who knows? So we started off with some mild risk aversion. Now we're seeing a little bit of selling. Now, we also had U.S. consumer confidence figures came out this morning. They came in a little bit better than expected, which isn't too bad. We also had, CPI data here in the U.S., and it came in as expected at 1.2%. Retail sales figures came in slightly lower than expected. 0.4%, I think, versus 0.5%. But I think the major takeaway here is that these numbers weren't negative here in the U.S. and based on all of the talk we've been getting about how bad the U.S. economy is and how we're going to slow and all this stuff, at least these numbers aren't negative. I mean, that could have really sent a shock into the market. So the this announcements in the U.S. were largely non-events, but we do have some dollar weakness, all except against the euro. Although it looks like maybe we're flipping around here and going from a little bit of risk taking to possibly some mild risk aversion, possibly returning to just flat lines. So you can see that's what's happening with the Aussie. Just want to show you the Kiwi real quick. All right, the Kiwi actually, they reported better than expected retail sales figures, although they had housing prices that fell 1.2%. So that's sort of pared back the gains on the Kiwi, if you will. But their retail sales figures, they were expecting a gain of 0.3%. It actually came in at 1.3%. That's almost 4 times better. So that's a pretty decent number there. We've also got a little bit of loonie strength today as the oil is coming back a little bit. I believe it's just under $76 a barrel right now, which is supporting that a little bit. We've got a little bit of a pound rebound here, if you will. You can see that it was higher earlier. Then it gave back some of the gains going into the U.S. session, and we're kind of floating around right here. Call 155.7 support for the day, although this looks like this could go lower. So it looks like maybe what was originally thought of as a risk taking is flipping around to risk aversion. Lastly, I just want to show you dollar yen. Okay, talks heating up now about Japanese intervention. You've got the politicians in Japan clamoring for Bank of Japan to intervene. They haven't succumbed to that pressure yet, but they're going to come out with Japanese GDP figures before the U.S. Open on Monday, which I guess would be Sunday night here. And if that shows that GDP slowing, it could be due to decreased exports due to yen strength. So so that could heat up the talk as well. So we've got dollar strength against Japan just marginally, and that's what we're looking at. So it looks like the market's just taking a little bit of a pause today, possibly a little bit of risk aversion going into the weekend. We've had some major selling as of late, so I don't think investors are ready to jump back into the market right now with risk appetite. The euro, like I mentioned, people are probably ditching it just going into the weekend with the debt concerns. But the GDP figures were good. Now, that was most likely due to recent euro weakness. We bounced off those June lows around 118 and change. So now the euro's higher. Is that going to affect their GDP going forward? Well, that's hard to say. So that's what we're looking at today. Looks like we're pausing. Market's taking a breather, and I'm about to do the same. So I'm out of here for the weekend. Have a great weekend, everyone, and good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.